Tesla breaks rules that would destroy almost any other company. It misses deadlines, it overpromises features, it sells unfinished products, it changes prices overnight, it experiments in public, it ignores traditional advertising, it launches products before they're ready, it makes claims regulators hate and investors should fear. And yet, Tesla keeps winning. Its stock survives scandals that would collapse other firms. Its CEO tweets things that crash markets and then walks away untouched. Its customers tolerate flaws that would cause outrage if they came from any other brand. By every normal business standard, Tesla should be punished. Instead, it's rewarded. Which leads to the real question. Why can Tesla ignore rules that destroy everyone else? And what does Tesla actually understand about power that traditional companies don't? The industry Tesla was never supposed to enter. The car industry is one of the most brutal industries in the world. Low margins, massive capital costs, complex supply chains, heavy regulation, slow innovation, and competition that's been refining itself for over 100 years. Most startups fail instantly in this space. Yet Tesla walked into this graveyard of bankrupt companies and became the most valuable car company on Earth. Not by building the best cars at first, but by breaking the rules of how car companies are supposed to behave. Why Tesla doesn't act like a normal company? Tesla doesn't behave like Ford, Toyota, or BMW because it isn't structured like them. Those companies are manufacturing businesses first and brands second. Tesla is a brand first and a manufacturing business second. This sounds subtle, but it changes everything. When Toyota launches a car, it must work perfectly. Any defect becomes a scandal. Any recall damages trust. Any delay hurts dealer relationships and stock prices. When Tesla launches a car, it's treated like a beta product. Customers expect bugs. Investors expect delays. The market interprets problems as part of innovation, not failure. Tesla trained its audience to see flaws as progress. That psychological shift is one of its greatest strategic advantages. The cult of the product. Tesla doesn't sell cars, it sells belief. Belief in the future. Belief in technology. Belief in clean energy. Belief that you're participating in something bigger than transportation. That's why Tesla customers forgive things no one else could get away with. Panel gaps, software bugs, broken timelines, incomplete features, hardware limitations. They're not buying a vehicle, they're buying membership in a vision. And when people emotionally invest in a company, rational expectations disappear. Tesla isn't evaluated like a business. It's evaluated like a movement. Why deadlines don't matter at Tesla? Tesla misses deadlines constantly. Full self-driving was promised years ago. Cybertruck was delayed. Roadster was delayed. Semi was delayed. Robotaxi is still hypothetical. In any other company, this pattern would destroy credibility. At Tesla, it strengthens it. Because Tesla doesn't use deadlines as commitments. It uses them as narrative tools. Deadlines create hype. Hype creates attention. Attention creates capital. Capital buys time. Time funds development. Tesla turns future promises into present value. The product doesn't need to exist yet. The story does. The real asset. Attention monopoly. Tesla's greatest asset isn't its factories, it's attention. Tesla gets more media coverage than almost any automaker in history without paying for it. Every product announcement becomes global news. Every tweet becomes a headline. Every controversy becomes free marketing. This creates something extremely rare in business, a company that doesn't need to convince customers. Customers convince themselves. Tesla doesn't fight for market share. The market comes to Tesla. Why regulators treat Tesla differently? Here's the part no one likes to admit. Tesla gets special treatment, not officially, not on paper, but functionally. Regulators hesitate to slow it down. Governments subsidize it, politicians praise it, investors defend it, media amplifies it. Why? Because Tesla aligns with powerful narratives. Climate change, innovation, American tech leadership, the future of transportation, AI, clean energy. Tesla isn't just a company, it's politically and culturally useful. and useful companies don't get treated like normal ones. The business lesson: rules only apply to the replaceable. Tesla can ignore rules because it made itself irreplaceable. It's not just selling cars, it's selling the idea of progress itself. And when a company becomes symbolic, it stops being judged by performance and starts being judged by potential. This is the hidden truth about modern power. Rules exist for companies that can be replaced, but companies that control narratives rewrite the rules. Tesla doesn't win because it's perfect. It wins because it operates in a different dimension of business, where attention is more valuable than efficiency, where belief is stronger than reality, where promises generate capital before products exist. In part 2, we'll break down the deeper mechanics behind Tesla's power, how financial markets protect it, why competitors can't copy it, and what happens when a company becomes too big to be constrained by truth itself. Because Tesla didn't just break the rules, it learned how to live above them. How financial markets protect Tesla. Tesla's most powerful shield isn't technology, it's the stock market. Tesla exists in a financial category that almost no other car company has ever entered. It's not valued like a manufacturer, it's valued like a tech platform. Investors don't analyze Tesla based on current profits, they analyze it based on future dominance. This changes how risk works. When Ford misses earnings, its stock drops because investors care about performance. When Tesla misses earnings, the story becomes about long-term vision, temporary setbacks, or investment years. Tesla doesn't trade on results, it trades on belief. As long as enough people believe Tesla will dominate electric vehicles, energy storage, robotics, and AI, the stock remains protected. This allows Tesla to raise capital cheaply, sell shares at massive valuations, and fund projects that would be impossible for normal companies. Tesla doesn't need to be efficient today. It needs to be convincing about tomorrow. Why competitors can't copy Tesla? Every major automaker has tried to copy Tesla. They built electric vehicles. They invested in software. They announced autonomous programs. They launched futuristic concepts. And none of them achieved Tesla's position because they're trapped by their own success. Traditional car companies have existing customers, dealerships, regulatory structures, unions, supply contracts, and brand expectations. They can't release unfinished products. They can't miss deadlines. They can't experiment in public. They can't break compatibility with their own ecosystem. Tesla had no past. It could design everything from scratch: direct sales, over-the-air updates, software-first architecture, vertical integration, no dealerships, no advertising. Tesla wasn't disrupting a market, it was creating a parallel one. And once that parallel system existed, competitors couldn't enter it without destroying their own foundations. Tesla doesn't win because it's faster. It wins because it started playing a different game before anyone else realized the rules had changed. The power of vertical control. One of Tesla's most underestimated advantages is control. Tesla controls its software. It controls its hardware. It controls its manufacturing. It controls its charging network. It controls its data. Most car companies outsource huge parts of their operations. Suppliers build the electronics, third parties build the software. Dealerships control customer relationships. Oil companies control infrastructure. Tesla owns the entire stack. This gives Tesla the ability to move faster, experiment more aggressively, and ignore industry standards that slow everyone else down. When Tesla wants to push an update, it doesn't need approval from partners. It doesn't need to coordinate with dozens of vendors. It just ships. This is why Tesla behaves more like Apple than Toyota. And Apple also gets away with things other companies never could, because control creates leverage, and leverage bends rules. Why Tesla gets forgiven for mistakes. Tesla has had serious problems: autopilot accidents, quality issues, factory shutdowns, production delays, missed promises, regulatory battles. Any one of these would permanently damage a traditional automaker. Tesla survives all of them. Why? Because Tesla operates inside a story, and stories protect brands from consequences. Tesla's story is about the future, about saving the planet, about innovation, about breaking old systems, about humanity becoming multiplanetary. So every failure gets reframed. Delays become ambition. Bugs become progress. Accidents become learning. Broken promises become hard problems. Tesla doesn't deny reality, it reinterprets it. The company that lives in the future. Tesla doesn't ignore rules because it's reckless. It ignores rules because it exists in a different time frame. It operates in the future, where promises are more valuable than products, where perception is stronger than performance, where belief creates capital before results exist. Tesla didn't become powerful by building better cars. It became powerful by making the future feel inevitable. And when a company controls the future in people's minds, the present stops being able to constrain it. If you want more breakdowns on how modern power really works, why narratives shape markets, and how companies escape the limits that trap everyone else, subscribe to the channel. This is Profit Logic. And this is what happens when belief becomes a business model.